first area where you can improve is when to enter into your trades. Because as you all know, you enter in at the wrong time when the market is reversing on you. Well, it reverses with your money. And so the whole point is to be able to interpret the charts to a point where you can enter in at the right time. And so I'm going to spend the first, I try to keep it below 10 minutes, just going over this basic topic of the week, which is knowing when to enter a trade. But one of the most important things, or one of the very first things you want to do, is to know what the trend is. That is gold. What is the trend? Is the market uptrending? Is the market downtrending? And the best way to look at the trend is always on the higher time frames. It's got to be always on the higher time frames. Right now, I have this on the 15-minute, but ideally, you want to be looking at your trend. Think about when there's a saying that says you can't see the forest, you can't see the trees for the forest. So, or you can't see the forest for the trees. That means if you're so zoomed into a forest, all you see are the trees. But when you kind of get this aerial view, then you actually see the bigger picture, the whole forest. And the same goes with trading. You got to know what that bigger picture is, and you always do it on the higher time frames. You can use the daily. That is golden. You want to see what's going on the daily. Now, if the trend is upwards on the daily, as we can see here, this last few, well, this is a 50-minute chart. So let's pretend it's a daily for now. This would be a whole day. The 1, 2, 3, 4, 5. The last 5 candlesticks would represent 5 days of upward movement, which is a great time to enter into a trade. Now, if we look at the first section here, let me try and draw an arrow. Let me see if that works. We see there was an upward trend, and then at this point, there was a reversal. So that is something for another topic, to identify when there's an imminent reversal, because you enter in a trade when there's going to be a reversal, then it's reversing again with your money. And that's one of the things we want to reduce that. We want to increase our likelihood of making a profit almost as soon as we enter a trade. I like to see green when I enter a trade, and I think most of us like to see green. Red is not a great color when you're trading. Except you shorten the markets, then you love red. But I tend to go long, meaning I'm looking for to make money when price increases on any of my trades. So that's the very first thing. Always check your trend. And when you're checking your trend, you're always going to check it on the you're always going to check it on the higher time frame. So let me move to another. What did I do with that? There. Do you want to save changes to? Yeah. So if we move into this second frame, now this is I moved it to what is this? Bitcoin and Tether. Okay, so this was last night, so Friday evening, and this is the chart on a daily. So this is awesome because you can see that over the last few days, the last candle that we see here is a Friday candle. So today's Saturday. So this last green candle is actually Friday, right there. And the point is, for the last 3 days, let me see, 1, 2, 3, price action has been trying to get above the line of resistance. And that line of resistance, or price of resistance, if you scoot to the right here, is $4,833. So Bitcoin has been trying to get past the $48,000 price point, but there's an obvious line of resistance. There is a force, and that force is actually created by sellers. So sellers have the, on automation. So people are camped out at this line of resistance. As soon as price action is, going to the 48K and above, they start selling. Selling always causes your price to go down. And that's what a resistance is. It's a tug of war between your buyers and your sellers constantly. So we, the buyers, we want price to go up. But the sellers, they make money when price goes down. So at this line of resistance, it's a tug of war. It's a question of who's going to win. When the buyers can outnumber the sellers, then we're going to have this situation here where price is just going to burst past, or the technical term is break out is going to break out through the line of resistance, and that is always good. Now, I'm going to go to the third chart, because the fact that price action breaks above the line of resistance is not a good enough reason to enter a trade. I'm going to pull up the next graph. So what has happened here is the next thing you want to do after you are getting ready to enter a trade, you always want to go to your smaller time frames. There are a few times when I will enter into a trade on a larger time frame, and those are the times when I'm interested in entering a trade for the long term. So if I'm interested, and right now I'm interested in, my main focus is purchasing Bitcoin to hold. Once I buy Bitcoin, I'm not trading with the bulk of my Bitcoin. So once I buy Bitcoin, I'm holding 80% of it. And then I can trade with the 20%, but mostly I'm not doing a lot of trading with my crypto, with my Bitcoin, because I am on a quest to acquire as much Bitcoin as I can. So that's always a good thing. So entering into your trade, the fact that you have price action at the line of resistance is not a reason enough to enter the trade. We can see the first rectangle. Price action did move up. It did that. It got to the line of resistance. You don't want to enter your trade at this point, because what happened with the next candle, the sellers pushed the price right down. So you're waiting. You don't buy until price action closes. It's got to close. Price must close above the breakout. So the line of resistance is just, if you like, it's the starting line. We don't want to throw our money in at the start line. We want to be sure that that race is going to complete. And so these two red candles obviously, have broken down below the line of resistance. So good reason why you didn't want to enter in this first rectangle. And so we're waiting, and then price action is moving back up again to price of resistance. Good, it's good. It's hanging out at the line. It's not breaking above it. So we're still not going to enter into our trade. Now, when we get to this arrow, I'm going to point these two boxes. The first one, the first candlestick, which is what is called a gravestone doji. So what happened is price action did break out. It ran all the way up here, but within the space of 1 minute, it didn't close. It then ran back down again and closed below the line of resistance. This is a prime reason why you don't buy a breakout until your candlestick has completely closed above the line of resistance. This didn't. So if we move to the second candlestick, the green one, it actually closes. You see the second candlestick actually closed above the line of resistance. So do we enter into the trade? What would you do? I know you can see the red candles, but let's assume we can't see those red candles. When this green candle closed above the line of resistance, it looks like it's time to enter a trade. But the one thing I have personally learned is to wait for 2 candlesticks to close. You want to wait for not just this green candlestick to close above the line of resistance. You actually want this second one as a confirmation that price action is going to continue upwards. Guys, if there's no confirmation, you don't enter the trade. Many of us are trigger happy, and what that is, because that's how I describe myself. Sometimes when my hand is on the button, I'm more prone to hit it than to wait. So I have been bitten with this bug so many times where you're so excited that price is moving up and you want to jump in there. But you know what? To be a good trader, discipline is probably another number one important thing. Discipline, you got to be disciplined. And that discipline will help you wait until 2 candlesticks close. So the first one did not close above. This green one closed above line of resistance. The next one closed below. So hopefully you didn't enter the trade, because what happens after that? That's what we want to avoid. We always want to avoid price reversing with our money, and it's not a good thing to see red when you're trying to make a profit and see green. And that's it. That's all I want to emphasize today. Next week, I believe I'll go over the best times to exit a trade, because that's another weak area where when do we exit a trade? After you're in a trade and your P&L is green and you're making that money, you see it's moving up. When do we exit? So that'll be for next week. And I'll see you all same time, same place next week.